Good morning. You're watching Business World Live. I'm Danie, Laurel.
And just the Santos, it's the start of a new trading day, but first, let's go straight to our top story. Typhoon Raleigh has damaged at least 1.1 billion pesos worth of crops, mainly rice. That's according to the Department of Agriculture. The DA said over 18,000 farmers were affected in Calabarzon, Mimaropa, and eastern Visayas. Damage to rice 739 million pesos, or equivalent to over 45,000 metric tons, as the typhoon whipped 13,000 hectares of farmland. Damage to corn crops reached 47 million pesos. In total, nearly 17,000 hectares of farmland, resulting in more than 66,000 metric tons of lost produce, such as rice, corn, and other high-value crops. The DA spokesperson Noel Reyes said that the impact of the typhoon on agricultural output is, quote, minimal, noting that most of the crops had been harvested before Raleigh battered Luzon. But former Agriculture Undersecretary and current BSP Monetary Board member Bruce Tolentino said the damage to Bicol is concerning because it is where some of the country's rice supply is harvested. UANP Center for Food and Agribusiness Director Orlando T said the effect of the recent typhoons will hurt output of unmilled rice or palay in the fourth quarter. Now, over in the United States, academics weigh in about what worries them most about the U.S. presidential elections. They say the uncertainty of who wins the seat at the White House is an even bigger threat than whoever actually becomes president. Let's listen in.
I just have to begin this conversation by using the word uncertainty.
I am very worried about the prospect of, if there is a contested election, especially widespread unrest.
What I'm most worried about is come January 20th, there is still no clear picture as to who the president of the United States is.
Reality will start to set in, I think, if President Trump wins, and I think that the market will be far less enthusiastic after the initial pop.
Certainly, there's been record-breaking turnout in a lot of places. Texas, it comes to mind. Whether this guarantees a Biden victory or not, I think is anybody's guess, and it's a fool's errand to try.
From election to election, the difference isn't so much of people changing their minds in the middle of the polls. Who decides to turn out?
Divided government, Biden in the White House without the Senate means that getting even emergency stimulus through in January is going to be very tough. And this country is going to need it.
There's not really an exit ramp for either side here. The stakes are so high that when we wake up on Wednesday, or potentially much further along if we don't know the results quickly, around half the country is going to find this to be an existential threat.
All right, Dan, while the country tries at least to rise from the ashes of yet another 2020 calamity, the presidential elections over in the U.S. should pose a distraction for the next couple of days. But how does that affect us really?
Okay, so ang daming ganap, Jess, diba? It was not really a restful holiday
Lots
for
of
the
things.
entire country. And as we just showed, the Bloomberg spiel there earlier on, so much uncertainty going on offshore as well. And that reverberates all across the rest of the world, really. So there have been more than 97 million votes so far counted or cast in the United States. That's 71% of 2016's total. What's different this year is that a lot are going to be mailed in kasi nga COVID, diba? So you can't physically vote. So a lot are mailing their votes in, and that might take weeks, months to actually count and even, declare a winner. And that's what a lot of investors are saying are causing a lot of uncertainty. Sino ba talaga? Now, why is this so important to the rest of the world? Now, investors are looking at the effect of the results on specific things. First, the U.S.-China trade relations. What's going to happen with that? You've got the
All right, lots of things we have to look into, of course, like what Dan was mentioning, the U.S. elections. That in turn has, of course, so far the past few days has turned out to be quite a historic event, considering that a lot of voters have already casted their votes in early voting. That, of course, is through mail-in voting. That's days ahead, of course, of the actual polls come November 3. But like what Dan mentioned, 97 million people. In fact, if I have the figures in their votes rather, that's 71% of 2016's total, leaving fewer in play. Polls, of course, continuing to show Democrat Joe Biden ahead of the fight, though battleground states actually still remain tight. This comes as U.S. reported a slight slowdown in virus cases over the weekend, but several states continue to notch record numbers of infection. Just yesterday, if I do recall correctly, you have Trump, of course, calling on his supporters, of course, to really, again, brandishing that brand of making America great once again. On the other hand, you have Democrat candidate Joe Biden calling on his supporters, at least, to go back and fight for democracy this time around. And we have more details here from Dan. And Dan, why don't you take it away? All right, it seems as though we're still having some technical challenges here with Dan, but we'll try to get back to her later on in the show. But for now, I'm going to move on and actually drive in on one particular development here in the local bourse. That particularly is, of course, you have the PSEI actually eyeing this time around to actually implement short selling come the first quarter of 2021. Of course, we do recall that, rules were actually already approved back in 2018, but this time around, they still have some pending applications, pending the requirements that they have yet to figure out, and they're hoping that they can finally at least roll that out come the first quarter of 2021. So again, short selling by the first quarter of 2021, according to Ramon Manzon, PSC President and CEO, they are just awaiting regulatory approval within the last quarter of 2020. Quarter, the move may actually drive up interest from offshore investors as it allows them to actually hedge their investments. Just to give our viewers a quick idea here, short selling, that's a high risk, high reward system here. You have investors selling borrowed security and then buying them back at a cheaper price in the future. Again, like what I mentioned earlier, guidelines were approved way back in 2018, but they have some pending approvals from the SEC and the BIR. That includes offshore collateral for foreign investors, as well as accreditation with Philippine Depositary and Trust Corporation as a certified securities lending agent, as well as a global master securities lending agreement. Other than that, of course, we do know that they are trying to change or at least make amendments to the listing rules here. That includes easing of requirements for companies planning to conduct an IPO. They are hoping to submit the final draft with this, and they are targeting regulatory approval come first quarter of 2021. Recall the stakeholders were allowed to actually comment on the amendments until October 7. They are hoping that that would boost listing for small businesses. But other than that, there are a lot of other developments here in the local bourse. That includes index for mid-cap stocks, gauge for companies with regular dividend payments, as well as two more sectoral indices here. That includes consumer and another index for tech, telco, and media stocks. So that would actually increase total sectors in the local bourse to 8. But other than that, one other development here, according to Monson, is that capital market has actually been up 5.2 billion pesos. That's amid the pandemic. That's just from January to October. According to Monson, there's been robust capital activity amid the pandemic. That includes, the 1.6 billion IPO of Merrimark back in June. There's also a REIT or Ali's REIT listing worth 12.3 billion pesos, as well as Converge's 29 billion peso IPO. A lot more in the pipeline, according to Monson. They are expecting 2 to 3 more REIT offerings at the same time. You have Base Resorts Group banking on a follow-on offering of 756 million pesos. So definitely lots of developments in the local boards here. That's something we are going to keep an eye on, as well as with our guests later on in the show, Alvin Limlingan. But for now, we're going to take a quick break as we try to sort things out here. Definitely lots more business stories we have to keep an eye on. Business World Live will return. Keep it here.
watching Business World Live. I'm Danie, Laurel. We apologize for the technical difficulties earlier on. Network seems to be having problems all over the metro. Nevertheless, let's go back to that market report. Now, as I was mentioning earlier on, U.S. presidential elections are today over in the United States. So that's tonight, Philippine time. And the polls are saying that Biden, which is, of course, from the Democratic Party, is ahead on a tight margin. Now, more than 97 million votes have already been cast at 71% of 2016's total. But the issue here is that since it is, of course, the pandemic, a lot of people have not been able to physically vote. And therefore, there's going to be mailed in voting, and that might take quite a while until the voting is completed. And this is what investors are really watching out for here. Not necessarily who wins, but how long this is going to be taking, the volatility which comes with that. Now, why is this election particularly important this year? Apart from the fact that it's a pandemic year, investors are looking at the effect on the results on U.S.-China trade relations. You've got also Iran oil sanctions, and finally the coronavirus stimulus bill. Now, investors are saying that if a Democratic sweep of the White House and the Senate happens, that might streamline the $2 trillion in additional fiscal stimulus, which could, according to Bloomberg Economics, drive the 2021 GDP over in the US to 5.4%. Without that, that actually has, an estimate of just around 3 to 3.5%. In Southeast Asia, their analysis is showing that an election win for President Trump would actually mean ongoing trade and investment risks. So a lot of things in the offing here. You can see, however, that ahead of this elections, the Wall Street indices had actually improved here. You've got the S&P 500 rebounding by 1.2%. That's after it had plunged 5.6% last week. The tech-heavy Nasdaq, however, seems to have not been as stellar as it was before. You've actually got a lot of investors rotating from the so-called work from home stocks. So you've got, Apple, Amazon, etc., and are moving into sectors that would benefit from more stimulus, positioning perhaps for that Democratic win. After this elections tomorrow, you still have a lot of things that are going to be watched out for. The Fed having a policy decision on Thursday and a jobs report on Friday. Now, another thing to be watching out for here is Europe. When it comes to a Biden win, that might actually remove the threat of more tariffs on European exports, and that might seem to be, what is keeping the optimism over in Europe, even as there are a lot of lockdowns right now happening. You've got, Italy creating a three-tier system for regional curbs and limiting travel. You've also got a lockdown going on in the United Kingdom, compliance being pleaded for by Chancellor Angela Merkel in Germany. And you've got already in Asia Pacific the stock seeming to be weighing on a muted open, but that actually seems to be reversing right now after just around 30 minutes of trade. We've actually got Japan closed this morning, but the rest of the region, like the Hang Seng in China, are actually posting gains following the rest of the United States' Wall Street open. Now, I'm very curious to see the Philippines because I did check it earlier on in the open, and we did not seem to be having the same sort of sentiment as the rest of Asia. You can see here on my screen, we are down by a hefty 0.9% to 6,200 levels already. Now, a lot may have also to do with the fresh PMI figures for October, which have just been released as of 8:30 this morning. And I'm just going to pull that out for you here. The IHS Market Philippines October Manufacturing Index was 48.5. This is actually a contraction. And you could see that the 50 line is the red line here. And if you're below that, it does signal a contraction from the previous month. And the problem here is that in September, we had already been above 50. We were at 50.1, so just really well, slightly above that. And it seems that our output has fallen and our new orders are falling again. And this comes amid the fact that the rest of Asia, at least the majority of Asia, seems to be having a very good October here with their manufacturing index showing that the rest, at least two-thirds of the economy in Asia seems to be improving. Now, the focus still seems to be very much on earnings, and we've got a lot to discuss here. So I need to bring in, actually with me, our guest this morning is, of course, Alvin Limlingan from Regina Capital. Alvin, thank you so much for joining us this morning.
Hi, Danny. Happy to be here.
Alv, I'm just gonna jump off on the PMI here and what your reaction is to this. Was this in any way expected, especially after the rest of the region seemed to have a better than expected October, particularly in China? Why is this not spilling over to the Philippines?
Well, to answer the first part of our question, we did expect something to that extent. Um, and the reason is, unfortunately, the economy is not totally on yet. The most, I'd say, deterrent, the greatest deterrent is the lack of transportation. So we've interviewed lots of people who run factories, and the simple problem is they can't get their workers to their factories. A lot of these companies operate on thin margins. And if you need to bus in these workers or provide transportation for these workers, they're simply not equipped to do so. So even if the worst is hopefully over, the economy is not yet back open. So this is to be expected.
Okay, but is this what is dragging down the index at the open today? Especially as we saw, a recovery on Friday, but that comes after quite a slide from the previous week. What is weighing down the sentiment today?
Well, there are multiple factors weighing down on the index. First, of course, is the U.S. uncertainty. It will have a very material impact on us depending on what happens. So we tend to move with that. We did have a good run up, and I think that's partly because of um, pricing where it is now. The market is getting cheap, and some people want to take advantage of that. The way I read it, the market is volatile because sentiment tends to swing back and forth very strongly. There are times when people are optimistic; they think the worst is over. They think a vaccine will be found, and then that drives the market one way, and then sort of sentiment turns quickly the opposite direction, and we have these wild swings.
Alvin, why is it that the rest of Asia seems to be optimistic ahead of the U.S. elections? What did you mean by there's a direct impact on the Philippines? If the Democrats do win, does that bode positively or negatively for our economy?
Okay. First of all, that's we'd have to go into that question in great detail. First of all, I think the biggest threat is no. I never thought I'd say this, but no uncertainty as to who the winner is. As previous guests have said, it's possible that there's no winner and it's contested, and that would really be messy. Now, setting that aside, it's also possible that while Biden wins, he does not get a clear majority in the Senate. So, if that were to happen, then he would be paralyzed from day one. So, again, you'd have to factor that in. But if you want to dwell on their economic policies as a whole, it's an interesting bifurcation. Trump, or Republicans, as you may know, were very big on tax cuts. And that had the effect of stimulating the markets, but maybe not good for spending, as because they had to borrow to fund spending. And of course, there's a limit to how much they can borrow. Now, if Biden wins, we expect the opposite to happen. He will probably raise taxes on the wealthy, he'll reverse the Trump tax cuts. And this might be good for spending. It might be good for earnings, not only in the US, but in other companies, because that tide will definitely lift all boats. But at the same time, it might not be great for markets because there'll be higher income taxes, so earnings will take a hit there. So it's a mixed bag.
What about the trade relations with the Philippines when it comes to the U.S. Philippines and even U.S. China relations spilling over here, depending on who wins and whether there are actually sectors here in the country that might actually directly benefit from trade?
Okay. I don't think the Philippines looms large on their consciousness. Now we have to be realistic. We're a very small country, and they don't really spend that much time thinking about us. What they do spend a lot of time, though, is thinking about China. Now, having said that, I don't think there'll be that much material change. I mean, if there's one thing, there is support from both the Republican and Democratic Party. is for the United States to take a tougher stand on China. Now, perhaps Donald Trump had more flair and he said it in a more colorful manner. And this had the effect of causing uh, causing swings in the market, more volatility in the market. And Biden perhaps will be more subdued. But I think the substance is the same, that they will both take a tougher stand on China. Now, the issue is, how does that affect us? Well, as we all know, markets, economies are interrelated. No? So if they take a tough stand on China, and if we supply intermediate goods to the Chinese economy, which then find their way to the United States, that's going to affect us. So we will be affected indirectly from this heightened tension. But at the same time, it can swing both ways. A lot of US companies, a lot of foreign companies in China are now moving their production bases outside. Although, unfortunately, we're not the winners there. The big winner is Vietnam, and Thailand, and us to a much lesser extent. But we may be able to supply these companies. But we should also remember that this creates an opportunity. We can still get a lot of these companies leaving China.
Okay, so there might actually be a bright spot there, or opportunities for us,
Yeah,
so to
in
speak.
the
Let's talk
midterm.
about Yes, let's talk about domestic issues here. What's your sentiment on the response of the government to the recent typhoon, and how this might actually have an impact on the COVID-19 related response funds that a lot of analysts are saying are already quite tight.
Well, I don't mean to detract from the human tragedy. Our heart goes out to those people who have lost their homes and have lost their livelihood, and of course, loved ones. So I don't mean to diminish the human tragedy. But the fact is, the areas that were affected were Bicol, largely, Mimaropa, and Samar. Now, as a share of GDP, they're actually quite insignificant. About 50-60% of our GDP is the Mega Manila area. And you add in Cebu and Davao. And these guys, our region was not hit so hard. A little inconvenience, but we're here. We're working on a Tuesday, the day after. Now, those areas that are hit, uh, don't play a major part of our economy. Yes, there's been some agricultural damage. Yes, there's been some infrastructure losses. But in terms of the overall, I'm not concerned at all. Again, not to diminish from the human
Correct.
tragedy.
But it could have been worse, as as you may have mentioned. It actually could have
Yeah,
been worse. So
we're
hopefully.
lucky. Yeah, the typhoon seems to have swung low.
Mhm.
Mega Manila does not seem, I'm not aware of any major damage to key infrastructure in the Mega Manila area.
Okay. Alvin, just to close on the earnings and your general reaction to the third quarter earnings, was this, the run up to these earnings, was that what had caused the previous rally, closing in on 6,500? And then when these earnings came out, was that what caused the major disappointment? What's your general outlook, and how do you parse through these earnings? Are they generally optimistic? Is it a mixed bag? Does it depend on the sector?
Yeah, well, it's a mixed bag, and I'm not sure if you want to drill in per company, no? So maybe to generalize somewhat, companies like RFM did well because of the increase in consumption of goods. In fact, Wilcon was largely in line because people are at home, and I guess they need to make improvements in their house. One thing that caught our attention is Metrobank. Uh, and while it's not surprising, it is concerning. Their loan loss provisioning points to their view that the middle market, which they serve so ably, is probably hurting. So that sort of gives you a hint of what's going to happen in the next few months.
Okay, so there's still a lot of risks on the downside here. Metro Bank trading at 40 pesos. That's down 1 and 8 tenths of a 1 and 8 tenths of a percent. That's after, as you mentioned, they had released their 9 month net income, which was down 49% to 11 billion pesos. Thanks so much for those insights. That was, of course, Alvin Limlingan of Regina Cap.
My pleasure, Danny. Anytime.
Thank you, sir. And that's a first look into the business day. Today's November 3. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess De Los Santos. We are One News.